In 2022, this company was trading under $5, and the market was writing its obituary. Bankruptcy was the headline. The debt was crushing. The dream was dead. And then it staged one of the greatest comebacks in stock market history. The stock rose from the dead, the losses turned to record profits, and it was crowned with the highest honor on Wall Street, a seat in the S&P 500. Then a short seller asked one simple, ugly question. What if the comeback was propped up? What if the profits that resurrected this company were quietly overstated by more than $1 billion, with help from a private company almost nobody can see inside, run by the chief executive's own father? Welcome back to Stock Verdict, where every week one company takes the stand. Today's defendant, Carvana, ticker CVNA, the car vending machine company, the comeback king of Wall Street. The question on trial: is this the greatest turnaround of our generation, or the most expensive family business in America? Order in the court. The charges were filed by short sellers, most loudly a firm called Gotham City Research, and they read like this. Count 1, that Carvana's earnings were overstated by more than $1 billion across 2 years. Count 2, that the company leans on a web of related businesses far more than it discloses and uses them to dress up its numbers. Remember, these are allegations. Carvana denies every one of them. But to understand this case, you have to meet the family. Start with Drive Time, a private, used car empire that Carvana was literally carved out of. Then Bridgecrest, the loan servicer that collects payments on billions of dollars of Carvana's car loans. And GoFi, a young lender that buys those loans. The short sellers claim that this private network quietly absorbs Carvana's risk and props up its profits, and that the true exposure could be 20 to 40 times larger than what shareholders are told. One public company surrounded by private doors. And then Gotham reached for the knife. Their report compared Carvana not to the tech giants it gets named alongside, but to a company called Tricolor, a subprime used car lender that collapsed into bankruptcy amid fraud allegations. Quote, more like Tricolor than Amazon. When a short seller says your comeback story reminds them of a corpse, the market is supposed to flinch. Because here is where the family tree stops being a metaphor. Carvana's chief executive is Ernest Garcia III. Drive Time, the private company on the other side of so many of these deals, is controlled by Ernest Garcia II, his father. Together, father and son control more than 85% of Carvana's voting power. Ordinary shareholders don't get a real say. And the father is a convicted felon.
Oh my God! Wow!
Exhibit 1990. The collapse of Lincoln Savings. The Charles Keating scandal. One of the most infamous financial frauds in American history. In the wreckage of that empire, Ernest Garcia II pleaded guilty to bank fraud. He got 3 years probation. 35 years later, that same man is one of the richest people in America, worth an estimated $24 billion, most of it built on used cars and used car loans. Now, a man can pay his debt to society and build something real. That's an American story too. But then you notice who checks the math. Carvana's auditor is Grant Thornton. Drive Time's auditor? Grant Thornton. GoFi's auditor? Also Grant Thornton. One firm, holding the flashlight on every side of every family deal. And then comes the exhibit that doesn't come from any short seller. In its own filing, Carvana disclosed that in June of 2025, it received a subpoena from the SEC asking about related party transactions. Let's be precise, because this is a court of fairness. A subpoena is not a finding of wrongdoing. The SEC sends them out all the time, and most of them go nowhere. Carvana says it is cooperating, and nothing in this case has been proven in any courtroom. But ask yourself one thing. If the books are clean, Why does everyone keep asking to see them?
And people are asking. Shareholders filed suit. And then came the escalation. A judge ordered drive time documents handed over. The private books, sealed behind that private stamp for decades, cracked open for the first time.
It's payback time.
Discovery is where stories go to be tested. Whatever is inside those documents is now evidence. Now the defense, and it is loud. Carvana's chief financial officer called the short reports, quote, 100% inaccurate. JP Morgan went through the allegations and pushed back, point by point. So did BTIG. And remember the oldest rule in this courtroom? Short sellers profit when the stock falls. Gotham is not a neutral witness. It's a bettor with a position. Every claim in that report could be wrong. And while the lawyers argue, the business keeps breaking records. In the first quarter of 2026, Carvana sold more cars than it ever has. Record units, record revenue, record profit. Margins the rest of the industry can only dream about. The machine works. But here's the question the bulls can't quite shake. If a slice of those record profits flows through deals with the family's private companies, deals that may not be arm's length, then how much of the record is real? So, a genuine resurrection or a beautifully dressed up family business? Here's what we can't ignore. At roughly 50 times earnings, this stock is priced for perfection, while an open SEC file sits on the table. But the other side of the scale is heavy too. Record results, a firm denial, and short sellers who have been wrong about this company before. All the way up. The verdict? Hold. If you own it, you're holding a winner, with a question mark stapled to it. If you don't, this is not the price to walk into an open courtroom. Don't buy the verdict before the evidence is in. That's our ruling, but you're the jury. Buy, hold, or sell. Drop your verdict in the comments and tell me if you think we got this one wrong. If this helped you see past the headlines, hit subscribe. Next week, court is back in session with another stock on trial. One quick important note. Everything in this video is for educational, informational, and entertainment purposes only. It is not financial advice. The allegations discussed here are unproven claims made by third parties, and Carvana denies them. Do your own research before you risk a single dollar. Court adjourned.